Hi, everybody, and welcome to today's webinar on AI strategy at the heart of digital transformation. Really pleased to welcome Tony and Andy as our guests today. They both do kind of full introductions on themselves as they do their little intro sessions. But I'm positioning Tony as the kind of expert on this call. I'm a kind of enthusiastic amateur. I think Andy's really interested in the art of the possible and kind of turning the dial from a product provider perspective. But the session's really going to be about dialogue between the attendees and the panel. Please feel free to use the Ask a Question button at the bottom of the screen. That's what's going to make this really interesting and interactive. If you haven't got a specific question yourself, you can still click on that link and then vote the questions that you really want us to talk about up the ranking. So that'll be really good from a interaction perspective. What I've asked the guys to do is just give a little introduction on themselves and a little bit about what they're up to from a company perspective that's got AI at its heart. I'll do a little bit of a wrap up after those sessions, and the majority of the session today is going to be Q&A, so that won't really work unless we get lots of questions. So all down to you to come up with those. So I'm going to hand over to Tony to start. Tony's co-founder at Wealth Wizards, doing some really kind of interesting and exciting stuff in the market. So you'll talk a little bit more about that, and we'll come back in a second after this session.
Great. So yeah, just a bit about my background. I'm founder of Wealth Wizards, as you said. Before that, I was part of founding team of SOPA, peer-to-peer lender, and Egg, the first internet bank. And before that, had a career at Pru. So I'm a long-time financial services person, and basically after the point of leaving Egg, I saw the massive opportunity of bringing technology into the space of financial advice. So that's kind of what we've been trying to do with Wealth Wizards ever since then. We certainly see it from a Wealth Wizards point of view. We certainly see it as using our software, working with financial advisors to make them more efficient, to see more clients, to deal with clients that they, in a more efficient and compliant way, and not necessarily replacing advisors unless they want to be out of that part of the value chain. So we definitely see ourselves as supporting financial advisors with the software that we produce. We have our own regulated entity within Wealth Wizards, which gives financial advice, and we use that to support a workplace wellbeing proposition. So that's called MyEva, and it starts with a digital journey and covers guidance and some automated advice on pensions and ISAs, and then refers to a small team of financial advisors who deal remotely. So I'm slightly reluctant to be described as an expert in AI, but we've been looking at the space of AI for about 2 or 3 years now, and we started off. We had the head of technology who was very passionate about it, and I must admit at the start of that, I was a little bit skeptical that we'd find usable applications. I mean, it's a very exciting area. The thing that I was particularly skeptical about to start with was that, in our space of trying to automate advice, and do the heavy lifting for the advisors and do those processes, that if you actually had advice given by a sort of black box, then that was going to give, even if it was very good advice, the FCA was going to say, okay, well, could you please show that that's suitable? Could you demonstrate why that's the correct advice? Could you show us how you came to that advice? And if the black box is exactly that, then it's not transparent in any way, and that doesn't really help. But it was interesting. We had a sort of cross-functional team. We were a relatively small company, 70 people. We had a small cross-functional team of people looking at this area. We started experimenting. We did quite a bit of work, just throwing ideas around, looking at what applications could be. And we've actually come up with a couple of applications that we found have worked really well. So although I said, the sort of black box nature of AI doesn't really help with the advice. But what we found was that particularly for complicated areas of advice, then there's a really interesting application of AI where you look at the factors that are involved in that advice, and you actually use it as almost a expert advice support. So we took the view of our chartered financial planners into some of the sort of complicated pensions transfers, for example, looked at the key factors that related to that advice, and essentially then ran a statistical model, a machine learning model against past cases that were compliant from particular advice businesses, that they were comfortable were represented a good view of their house view of how they gave advice. And what that actually did was then create almost like a pattern recognition on what a compliant case might look like. Now this isn't necessarily to I certainly wouldn't want to use this to give advice without an advisor being involved, but it certainly helps advisors and compliance people to view the advice and look at how different it might be from a previous case, how similar it is to previous compliant case, and actually almost to focus the case check-in on those cases that look unusual, and maybe focus less compliance check-in on the cases that don't look unusual, rather than trying to sort of boil the ocean with every single case or sample cases where you don't know whether they're the right cases you're checking. So we've used that. We've done an exercise with an advice firm where we reviewed their previous. These were final salary transfer cases. We reviewed them against their own cases and a set of market cases that we've got anonymized in our database, and we're able to sort of report on the cases they've written and give them a perspective on how close to the compliant cases they were there any unusual cases involved, and that proved incredibly useful to them as a sort of aid to understanding the risks they got in the book of business they've written. So that's one application that we've actually implemented and found really, really valuable. Another one we've looked at is with digital journeys. So obviously with our digital guidance, we're looking to follow advice principles and make sure that people are sorting out their debts and their emergency savings funds before going ahead and investing, etc. So to a certain extent, the prioritization of their financial goals is relatively straightforward. But what we're also trying to do is get people engaged and make sure that we it's no good giving the advice or guidance if people aren't taking action. So we're really looking to try and find out what is the next best action we can recommend to a user that's going to be aligned with making them financially better off, improving their financial well-being, but actually is going to drive action from them. So we've been using, and actually there's quite a lot of good white label propositions, AI capabilities, and there's what Netflix use to recommend the next video or film you might want to watch. So there's a model that we've sort of customized to do that, to actually work out what the next best action is to recommend in the digital journey. And it's early days on this one, and we haven't integrated it with our digital journeys. But what we do is we look at the data, run it offline, make changes back into the tool, and then try and optimize the journeys. And again, it's been very useful to understand what sequencing to recommend things into. So basically, those are the two applications that we've come up with and used. We've also got quite a few other areas we're exploring. One of them is looking at natural language processing. So what we found with that is that we have a chatbot for the digital proposition in the workplace. We did some experiments with the natural language processing, and I think it is something that can work very well in a customer service context, but certainly giving guidance and advice at this stage, it didn't seem to be giving a good enough customer experience to make that really useful. So the chatbot we're using is really a decision tree kind of process. it's not really using any. It's responsive and personalized, but it's not really using any AI recognizing the text that's typed in at this stage. And that may come in the future, but I don't think, certainly our experience is it isn't quite ready to do that, because if you misunderstand what the client's typed in for any reason, then you're off down a journey that's not really going to help. But I think where we're finding the experience we're running in the lab where it might be really useful is in looking at transcribing conversations between advisors and clients. I mean, I'm having sat with advisors on the telephone with clients, quite often there's sticky post-its all over the screen and all over the desk, and then they're sort of spending half an hour after the call writing out notes, and it's very, very easy to miss something. I know there's call recording, but obviously then you've got to go back through the call and work out which bit you want to look at. So a transcriber system, which again, there's an accuracy level which isn't 100%, but if you can get notes taken of the conversation and it's pretty accurate, then that's can definitely be helpful. What we looked at doing is sort of teaching the AI to recognize certain financial services terms. So if the client mentions a pension, if the client mentions an investment, making sure that the tech can pick up those words and highlight them in the transcript. And again, it's for the research we're doing, it's proving really useful. Now, ultimately, where could that go? I mean, you could imagine a future where the advisor and the client are talking, and magically in the background through open data and transcribed conversation, the fact find and the advice is kind of being part drafted. I think we're a way away from that, but it's certainly you could start to see even some of the more basic fact find fields being filled in draft for review later on. So I could probably waffle on for ages, but I'll probably stop there, because that's the sort of summary of where we've got to in terms of our use of AI.
Thanks very much, Tony. That was a really great start. We just had a question from Mark, which is, "Hello, is this going to happen? Nothing visible at my end." I'm not sure if somebody can just help Mark out on the chat from our side, just maybe getting him to log out and log back in, because this all seems to be working from our perspective, and we are getting some other questions. So I'm assuming the majority of people can actually see what's going on. Thanks, Tony. We're going to bring you back for the Q&A. I've certainly got a couple of questions on the back of the bits and bobs that you went through. I hand over now to Andy Stewart-William. Andy's head of product and comms at Curtis Banks. In the interest of openness and honesty, Curtis Banks bought Dunstan Thomas just over a year ago. So Curtis Banks is our parent company now. And I've actually been quite involved with Andy on some chatbot developments as part of Curtis Banks Labs, which has been set up to look at some future tech and kind of market innovation. So that's been a really interesting journey for the combined business. But I'm sure Andy will touch a little bit about that as part of his intro. Over to you, Andy.
Okay, thanks very much, Andrew. I think, yeah, as you've said, I'm head of products and communications for Curtis Banks. I've spent a lot of my career at Legal & General as well, and I've built up a fair amount of experience on products, marketing, and conduct risk over the years. I suppose the point of coming in here to talk about artificial intelligence and machine learning is the work that, as you've said, we're working with you guys with to help really improve customer experience and also staff enjoyment of their jobs. Machine learning and AI can be used in lots of ways to improve customer experience and also staff experience. And as you we alluded to earlier there with Tony talking about chatbots is one of the areas that we've done from a very basic point of view, but we're very much at the starting point of this journey, as I think many financial organisations are. And I think we had an interesting discussion before we came online regarding what was machine learning and AI as opposed to basic algorithms and what we've termed robots over the years, which the robots tend to be doing repetitive tasks, and they've been doing that for years through basic algorithms, whereas AI and machine learning is typically does tasks that require thought that we previously thought that only humans could do, and it tends to require interpreting large amounts of data or random non-ordered data, and we've certainly used that within Curtis Banks for that purpose, and it was interesting to hear Tony talking about transcripts. I've worked on a project recently where we had to translate lots of phone calls into a transcript and used AI to do that. We weren't then taking that and interpreting it into perhaps perceived behavior, but that's definitely an area that could be utilized going forward in that advice process. That's got enormous potential in my view. But I think as part of the background to this, I always like to go a bit back to basics purely because of my product side of things, but also we work in financial services and we use lots of terms and acronyms in this industry that make things sound really complicated when often they're not actually that complicated. I'm not sure AI falls into that category. I think maybe it's my non-techie nature, but AI is definitely complicated for my small brain to understand, and I think that black box element that Tony's referred to is very much the case. But quick googling around on definitions of AI was quite interesting, and as we've left the EU, I thought I'd look at the EU website to see what they categorize it as, and they say it's the ability of a machine to display human-like capabilities such as reasoning, learning, planning, and creativity. AI enables technical systems to perceive their environment, deal with what they perceive, solve problems, and act to achieve a specific goal. The computer receives data already prepared or gathered through its own sensors, such as a camera, and processes it and responds, which I think starts to get to the sort of next level that the industry is crying out to get to. And then if you sort of move on to the FCA's view and their thinking around this, is that they're, just as a headline sort of synopsis, that while the use of AI has the potential to enable positive transformations across the industry, it also raises important ethical and regulatory questions, especially when they have significant impact on consumers. AI systems must be designed and implemented in a way that's safe and ethical. There's also concerns from the ICO, but I suppose that the nub of this is in the world today. We're collecting more and more data and storing more and more stuff on computers, to the point where the EU reckon that there'll be 175 zettabytes of data produced in the world, and that's expected to grow from 33 zettabytes in 2018 to 175 zettabytes in 2025. Now, I've absolutely no idea what a zettabyte is. I mean, I get frustrated when my mailbox collapses because I've got too many emails in it. But there's an enormous amount that computers can do to help us interpret that information, and I think that sort of leads us on to the opportunity side of things, and how can we utilize this power of computers to allow customers to self-serve at the next level. Anybody else has ventured abroad in recent times, but it took me 4 hours to fill out the COVID forms that I had to do to drive through France. Can we take the grunt work out of experiences for customers and make them more enjoyable and easy? Tony talked about the fact-finding experience from the advisor point of view earlier, but from a customer point of view, I know from previous experience, I've heard of customers asking for refunds of their parking tickets because of the amount of time it took to complete a fact find with an advisor, which is clearly demonstrating that, one, they're not valuing that experience and that data collection, that know your customer side of things. They're not valuing that. What they really value is that recommendation side of things from the advisor, and the analysis of the information that they've given them, perhaps in that plastic bag out of their kitchen drawer, which I've only just today seen a tweet from an advisor sort of dreading a new customer coming on board with lots of different products from lots of different providers. And we as providers have got to make that data flow much easier for advisors to put into their fact finds, from my point of view. The staff perspective as well, people can't get through the enormous amount of data themselves, so they need assistance in doing that. And we should be able to use the data that's held on us to make decisions that humans find difficult. So, for example, in the advice process, the risk profiling, fraud risk, their investment appetite, and their capacity for loss. All those things that are actually quite difficult for an advisor to get into. The computer might be able to do some of that early legwork for them, so that they can then question the answers that the customer's given. We really need to sort of wow the customer with slicker processes, for my view, and that can be obtained remotely in some way, so that the customer hasn't got to go and get all that information, and the advisor hasn't then got to input all of that information into a laborious structure. Obviously, the huge benefit of being able to operate 24/7, we can create, from better customer insight, we can create better outcomes. We can drive down charges through increased productivity. There's some stats from the EU where they seem to think that the potential for increasing labour productivity through AI by 2035 is around 11 to 37%, which is an enormous uplift in productivity, which hopefully can then translate into lower charges, and perhaps through lower advice charges, we can get more customers to get advice. We know the advice gap is quite large, and the barrier to get into regulated advice these days is getting higher and higher in terms of the assets under management. So I think just finally, the sort of challenges that I see are around the customer data and the ownership of that. Digital IDs, can digital IDs be used to unlock that customer data? Will customers allow firms to use their data in this way? Will open banking take off, for example? But has the pandemic helped us break some of those barriers? Now, I certainly use my phone now for online banking. Prior to the pandemic, I wouldn't have done it. We've got staff concerns over computers taking their jobs, but actually, I found quite the opposite when we've been doing the chatbot work with Duncan, Thomas, and Andrew. Is actually they found it really, really rewarding in doing that. We've also got to be careful that machines can learn badly too, as well. There was an article in FT Advisor only last week where Amazon had filtered out a load of CVs as a result of the computer learning from which CVs went through. And we've got to work hard on not allowing our human biases to influence those computer learning. And of course, if you get it wrong for one on an automated advice process, there is that systemic risk. So that's, I think, I'll leave it there from my point of view in terms of the opportunities and the challenges I see, and hand you back to Andrew.
Thanks, Andy. I'm not going to speak for very long before bringing the other guys back. We've got quite a few questions. So I just clicked the wrong button there. Trying to multitask never really works that well. we've got quite a few questions coming in already, so please keep those coming. I don't normally do a book plug, but I'm going to do one today. This is a really interesting read. The AI Economy by Roger Bootle. Roger Bootle, he's 69, nearly 70 years old, I think, and he's been an economist, been bouncing around government and consulting firms for a long time. I had the pleasure of hearing him speak at the Houses of Parliament pre-lockdown. And ignoring the politics of this thing, right? So he's a member of a kind of pro-Brexit group of economists. So you'll fall pretty binary on one side of that argument or the other. But this book really does give a really good kind of non-technical insight into the impact of AI on the economy, kind of at a macro level, but also, you know, what it means for individuals in terms of jobs, who are going to be the survivors, who are going to be at risk, what it means to our leisure time, what it means to education was a fascinating chapter. It's also got must be one of my favorite quotes in here from Carl Sagan, which is, if you want to make an apple pie from scratch, you must first invent the universe. Have a little think about that one. A classic Carl Sagan from a little while back now, but still particularly apt. From a Dunson Thomas perspective, so I'm Chief Distribution Officer at Dunson Thomas, been bouncing around the industry for quite a while, cut my teeth as an IFA a little while back now. Also had a stint at Prudential. Everybody you seem to talk to in this industry at some point has been involved in Prudential at some time or other. And I've been in the kind of fintech space for the last 10, 12 years or so, and with Dunson Thomas for the last 5. And, you know, the reason why we think it's a really good thing to be talking about AI at the moment is because it's popping up all over the place. So I was in a conversation with a startup company yesterday who've got an AI-driven ESG tool to aid advisors in terms of selecting portfolios of assets with an ESG focus for customers, to do that kind of heavy lifting analytics using data on 160,000 instruments, all updated daily or intraday, in terms of all the kind of ESG measures. That would pretty much be impossible if somebody's still at Prudential, well then Alan, so that would be pretty much impossible from a kind of eyes-on human task perspective. And the AI linked to big data is where we really start to see some. We think we'll start to see some, groundbreaking kind of things that turn the dial in terms of customer outcomes. And customer outcomes, it must be at the heart of this. So we're not talking about kind of academic, really interesting, kind of geeky hat. What's the art of the possible? As an industry, we're still in this period of downward pressure on fees and therefore costs, and pressure in terms of the quality advice and customer outcomes. And it's sometimes, if we just had the status quo, it would be difficult to conceive of a situation where we produce better customer outcomes, better service at a lower cost. Because that's the kind of scale that just doesn't get balanced, and we believe as a company, AI is that bit of glue, that essential piece in the middle of all this that will allow companies to start producing better customer outcomes at a lower cost, in a really kind of measurable, tangible way. And I'm guilty as charged. I'll often kind of cite examples which are really robotics in nature, and they are use cases which require fairly basic algorithms to aid in calculations and prompts and nudges. And if you think about robotics in the kind of automotive industry, it's been there decades. Automation in software environments is not that old. So robots, kind of digital robots that take the place of humans in terms of keying in data, of interpreting forms, of moving information from one system to another is fairly recent technology, but it's still not artificial intelligence. They are still programmed, task-driven, repetitive, bits of software that do things day in, day out, probably quicker than a human, but they still require that kind of programming to do those repetitive tasks. AI is where we really start to see technology take the place of things we would have normally expected to be only done by humans. So things that require visual perception, things that require speech recognition. Tony's already talked about natural language processing, and decision making is a really big one. So the ability to make decision based on data that you have at your disposal, and given that the capacity for technology to consume and interpret data, those decisions can be kind of more broader and take more moving parts into their consideration when they're done. So that's kind of all I wanted to say as part of my intro. I'm going to bring the guys back in. Hopefully, if I can drive the tech. There's Tony. Get everybody's microphone switched back on, and there you go. Technology works. Okay, so don't forget, anybody can vote the questions up, even if you haven't got a question yourself. So we're going to start from the top. Questions from Chris Lamb. And the question is, what do you think happens to firms which don't embrace or embed AI as part of their transformation strategy? Will they be looked at by customers as having a more personal touch, or will they be just left behind as the consumer seeks speed, efficiency, and above all, cheaper costs? I'd be interested to know what you think about that yourself, Chris. So I don't know whether you got time to give your view in the chat section. But let's hand over to Tony and get a view, and I'll come to you, Andy, next.
Yes, a really good question. I mean, I think if you go back to what you were saying about we're driving for better outcomes at lower cost. Well, who wouldn't want that? So to the extent that we get AI applications to the point where they really are delivering consistently better outcomes at lower cost with better compliance checks, then it's just going to be one of those things that, as long as the price is right, people are going to want to adopt those kind of technologies. I'm not sure we're there yet, so I'm not sure that there's lots of applications out there that as a medium-sized advice firm you can suddenly plug in and away you go. I think they'll come. So I think for me, I'd keep a watching brief on it, and I certainly wouldn't adopt it for the sake of it. I definitely, as we did, I think, experiment with it, look at it, have a play with it, challenge it, see if you can get any use out of it. But yeah, just don't stick it. Yeah. Oh yeah. AI, amazing. Let's whack it in.
Yeah. Andy.
Yeah. I just scribbling down some notes and didn't realize I was still on camera, but getting used to this medium. I think for me, people still buy people, and it's how we use the two mediums together for me to drive those better outcomes. And how can we get the computer to do what the computer's good at, and the human to do what the human's good at? And if you can merge those two things together in a perfect combination, then we're really onto a winner. Because it will drive down costs, it will drive down time, and it will remove those boring tasks that people don't like to do. And maybe people will get more engaged in financial services. I mean, that would be a fantastic win, wouldn't it? I mean, we all tend to be a little bit less nonplussed about financial services because probably none of us put our hand up in a career session and went, I want to join financial services. But you never know. If it is easier and it is less painful to go through the process, more people hopefully will become involved in it. It'll be more accessible. But there's probably a niche market as well for just pure human. Just to answer Chris's point, there probably always will be that. There will be certain groups of customers, and we know the FCA are very worried about vulnerable customers and how they'll be impacted by these changes. And we've always got to keep those things in mind whenever we're designing a process.
Thanks, Andy. Yeah, I think from my perspective, I absolutely agree. People by people. We did a session with a consultant we use quite regularly a few weeks ago, and he has some really interesting insights from a couple of journals of psychology. So obviously, lockdown and the pandemic has forced a lot of discussions online. We're doing this event via webinar. But the current research basically says that if you already had a face-to-face relationship with somebody pre-digital engagement, then you can sustain the trust levels, right? So if you've eyeballed them, they've seen the whites of your eyes, they've got all that kind of non-verbal communication that they bought you as an individual and trust you, then you can maintain that online. If you've never met that person before, a couple of interesting things. The further away you are geographically from them, the more distant they feel from you, right? So if they know you're in the north of Scotland and they're in Bristol, it's a kind of a barrier to building a relationship. If they know you just up the road, on a street a few streets away, they feel far closer to you personally, so you've got a better chance of building a relationship. But generally, the more you speak to somebody online, the less they trust you. And there's been a lot of research on this, so absolutely people by people. So I think from an AI perspective, we're saying, actually, how can we release advisors to spend more time building that trust with their customers by taking some of those non-personal tasks away and aiding them in their, that long-term relationship with people. And just one more thing. I mean, we all know intergenerational wealth transfer is going to be a huge thing over the next decade or two. Actually engaging with that next generation before they hold the wealth is probably going to need something a little bit smarter than sitting face to face with people. And I think that may be one of the things that AI can really assist with, engaging that next generation prior to them, while they're saviors rather than investors. So hopefully that kind of makes sense. So thanks for that, Chris. Be really interested to know what you think on the back of what the guys have said. Okay, next question is from Tim Thompson-Wright. Tim was a speaker at our last webinar, so welcome back, Tim. What interesting real-world examples of AI, machine learning, etc., being used in finance, particularly financial planning, have the panel seen? So I know, Tony, you covered a couple of examples in yours. I don't know whether you want to add anything to that in answer to the question. Maybe things you've seen in other companies rather than your own.
Yes, there's some really interesting work going on in terms of vulnerability checking as well. I feel that it's a really, the FCA obviously putting a lot of emphasis on the whole vulnerability piece, quite rightly, but it's quite hard to go beyond asking a question, "Are you vulnerable?" or more reliably to the assessment of eyeballing someone and having that face-to-face interaction. But using data, I think that I do struggle a little bit with this, the zettabytes or whatever it is of data, because I think too much data means you can find a pattern of anything you want. You could kind of find the answer to anything in a big enough data set. So we have to be super careful with sort of interrogating lots of data for random questions. But I do think that used responsibly, trying to work out with people who what are early signs of vulnerability and how can we intervene with those people in a way that will help them. And sometimes some people absolutely want to speak to somebody, and sometimes some people just need some some signposting, and some people just need some other help. So I think that's a really interesting area that we can get into, but I think it's got to be explored quite carefully. So that's certainly one of them, and I think there's an analogous thing for product providers looking at the whole suitability of products, which is again quite hard for them to do at 1 or 2 steps removed from having marketed the product, perhaps through an advisory channel or an introducer or whatever. But how can they look at the interactions they're having with the client and use that data to sort of make some assessment of suitability? And it's not going to be a definitive assessment, but there are any signs in that data that can be used to say, look, now you might want to review this product. Now you might want to speak to a financial advisor. Now you might want to call our call center. So I think, again, that's another interesting space.
Yeah. Andy.
Yeah, that's really good point, Tony, on the product side of things. We obviously do a lot of work around target market for products, and how can we use we monitor that target market and ensure that the product's sold to that target market. But is there another level of information that we can go to within that to really test that? And because at the moment it tends to be quite high level. They'll monitor the general investment level, the age of the customer, the profile, the activity that they're taking out. Are they accumulating, de-accumulating? But getting underneath the skin of that is a really interesting area, as well as the value for money assessments. We've seen the FCA come out with customer duty stuff this year, which has taken the value for money evolvement, if you like, to another level, and assessing value for money within a product is really quite complex and requires lots of data to be interpreted and lots of benchmarks to be set and measured against. So again, I think it's a really, really useful area that we could use it in. But going back to the advice process, I think fact finding, as we've said, is quite laborious for both advisors and customers. It's not where the real value is for the customer. The recommendation is the key point. The risk profiling, we've talked about using social media for risk profiling for seems like 15-20 years, but I've not actually seen anything use it yet. But that might be my distance from that side of the market these days. Capacity for loss it is another area as well. Can we? But none of these areas, and vulnerability, as you talked about, Tony, I think is another crucial area. But none of it I can see getting to a point where you don't need a human at the back end of it to kind of say to kick the tires on it and make sure that we haven't picked up the wrong data and analysed it in the wrong way, as you say.
Thanks, Andy. I think personally, I'm quite interested in the whole kind of behavioural risk profiling. BIQ was to look at if you haven't seen what those guys are doing. Really kind of interesting way of really doing risk in a different way. So, asking questions and looking at your how you actually tick as a human rather than how you actually answer questions is really interesting. And again, I think ESG, given its increasing importance, you can probably only do ESG well if you got some really good AI in the background providing you with that kind of data and analytics, because the data is so big and so dynamic and complex that actually that's probably going to be almost an immediate area that we're going to see an increasing number of AI propositions as advisors kind of transition into including that in their portfolio planning.
I have seen one application for risk profiling, which was facial recognition. So this was a live proposition. So it would show you images of more or less risky scenarios, like walking over a wobbly bridge. It would look at your face and then tell you what risk profile you were, which was incredibly clever, but just seemed to me slightly redundant because at the end of the day, it didn't take away the need to have a conversation with the client about how they felt about that and their investments, and actually what's the what's the chance of you not getting your money back in 20 years? Because
Yeah.
that's the real conversation. So
Yeah.
incredibly clever application, but not really working for me.
It might be taken on to another level, mightn't it? Where you're interviewing the customer and you're talking about perhaps you're talking them through a risk questionnaire, and it uses the webcam to say actually the customer's not 100% sure about that answer. I think
that's the really useful application of exactly the same technology.
Yeah. And voice as well. So it's like nuances in voice timbre and how you're answering a particular question. I'm sure Cheltenham, the guys at GCHQ just up the road from me here, are pretty proficient. So it'll be interesting to know about real world examples of voice interpretation.
Now you've name checked, we'll be monitored. I hope you remember.
Exactly right. Yeah, that's me. I'm gonna get a big black SUV driving past later on. Okay. And then another good question from Tim. How does the use of AI interact with regulation? FCI, GDPR, etc. Are the FCA looking at this, and should they be? I'm going to come to you first again, Tony, because you did touch on this as part of your intro.
Yeah, I suppose there's in terms of the regulated device, I think there's the explainability element which has to be there in terms of backing it up. I think the data protection aspect is a really important one, and I think that it's about responsible use of that data. So we're using anonymized data from groups of clients to make inferences for other groups of clients. So that's I'm certainly comfortable that we're not breaching any GDPR requirements. We're certainly not invading anybody's privacy in that sense. But there's clearly a grey area in the middle of that where you're starting to use more and more nuanced and focused sales of data that ultimately could, even though you've taken out name, address, postcode, still could be identified back to individuals. So I think it's an area that's gonna it will take a lot of it will provoke a lot of interest, and I think we have to tread on the side of caution for me.
Yeah. Just a bit of an advert for our next webinar. I'll come to you in a second, Andy. So at the bottom of the screen, in the green link, you can sign up for the Preparing for the Personal Data Age. That's this topic of our next webinar, and it came out of a couple of discussions I've had recently. Which is like, whose data is it anyway? And I guess if I spoke to some people at Curtis Banks, Andy. They think the data held on your systems is yours. It's your proprietary data. You've got your own kind of internal dynamics in the vision system. It's held on your tin, your software. I think if you then talk to an advisor firm, they say, "Oh well, we just placed business with this company." So it's actually, it's our data. It's our customer. We've collected this over decades. We've got the relationship. If you talk to the individual advisor, they might want to take that data with them as they moved IFA firms. so the advisor might have a view on the fact that it's their personal relationship with the customer that resulted in holding data. And then if you talk to the CRM system provider, there's a few big ones in the industry. They might say, well, you hold on that CRM data on our systems. We're not going to allow anybody unfettered access because it's on our tech. And then you talk to the customer, and ultimately it's their data, right? And I think customers are waking up to the fact that it is their data, and regulations and companies need to empower that customer to share their data with who they want to in a kind of very safe, very obvious way. But everybody being really clear on whose data is it, and ultimately it's the customers. But I think we've all got this kind of perception that different parts of the vertical own that data in some way or another. So that's the topic of the next conversation. But it does have a bearing on what data is available to kind of drive that AI functionality.
Yeah, I agree. And I think it clearly is one of the areas the ICO are grappling with and are starting to release more and more information on and thought pieces on. From the FCA point of view, we've seen sort of a gradual increase in their information they've produced on this since 2019 up to date. They've started, as they did with vulnerable customers, finally with insight pieces, and then slowly moved into more and more from a regulatory point of view. They've created a private and public forum for discussing this now, and very much sort of along the sandbox stuff that they did on the advice industry a while back. And of course, they're using it to determine their own areas of focus. They've been very clear in their business plan that they're going to use artificial intelligence in order to establish the areas that they think they need to focus on. So it's a clear focus for the regulator. It's a clear area of concern, but also opportunity, and they don't want to block the opportunity. It's about working with the industry to understand how it can be used effectively, but manage those risks that we've outlined very clearly at the same time. So it's finding the right balance between the two.
Yeah, a couple of interesting comments in the chat. Adrian says, it's not just about whose data is it, it's who's responsible if it gets lost or misused. Good point, Adrian. And then he helped come in on the back of that and said, this is where blockchain technology comes in, allows the end user to own their data and allow access to it rather than institutions allowing access to the customer. Absolutely right. I think this whole data and who owns it has got some legs in terms of trying to work that through, particularly in this industry where, you know, it's really personal, confidential data that in the wrong hands can be pretty dangerous. So yeah,
that's where you sort of have almost a key to unlock your personal data, and that whether that's your digital identity. Again, that's something that's been talked about for a number of years, and Chris Dunstan Thomas and I have been having some interesting conversations with some firms around digital identity and how that develops over the coming years. And I think the government want to move to digital identities 2023-ish. So that could all work together.
Yeah. Good stuff.
Just to build on a small point on that. I mean, I think that if you widen it out from just, you know, sort of financial advice, I think decision making, which was the point you were making earlier, you know, decision making is a crucial thing around, you know, AI and machine learning can help. But as an industry, if we start making exclusion decisions about people, whether it's access to credit or, you know, investments or pensions or whatever, without making it transparent why and how that decision is being made, then I think we've got an issue. You know, so I think that's an area where we've got to think so carefully and almost, you know, drive transparency into those key areas. Yeah, if the black box is used to help people, great, but using the black box to exclude people from stuff is really dangerous.
Yeah, no, understood. Thanks for that, guys. Next question is from James Martin. Is algorithmic trading the end of traditional investment manager? I think probably, I don't know, Andy, probably closer to you than anybody else, given your past experience. But what do you think?
Yeah. Well, we've seen some of the danger signs of that, and how people have tried to play against that in markets recently, haven't we? And and you can probably see it when we reach certain glass ceilings on investment levels where sale prices are programmed in and things like that. We kind of reach that. You keep knocking on the 7,000 point in the FTSE. We kept knocking on that door for a long time, and it kept just always dropping back. But yeah, well beyond my brain power, algorithmic decisions on trading, I'm afraid.
I think this is, you know, it's an interesting one. So if I've invented an algorithm that can trade and beat the market, I'm not going to use it to manage investment funds.
No.
You're not going to hear about it. I'll be on my island in Bermuda, you know, nice emails, guys.
Yeah. Waiting for a visit from James Bond, probably.
So when a fund manager says to me, "Give me all your money for 1.5%," I'm going to use algorithmic trading. I'm going to be quite skeptical.
Yeah. I concur. I think anything which is too obviously rules based is open to abuse and potentially dangerous. But I think there will clearly be the place for AI in trading. To analyze data at the speed of light and provide input into decision making. I think is going to be absolutely fundamental part of investment management. Whether that is a kind of singularity that is all knowing and does stuff, personally very much doubt. But James, be interested to know what you think about that one as well. Okay, question from I'm sure a test isn't necessarily Alex's surname, but maybe it is. Alex, which AI applications designed to drive advisor efficiency will take off first, and which are already proving to work well in early pilots? Tony, I'll come to you first on that one.
Yeah, I'll go back to the example I used before was the almost the sort of compliance checking for complex cases. So where you've got a good data bank of compliant cases, then you can test the next case coming through against that. And again, it's not going to say this is bad advice or good advice. It's just going to say this case looks very similar to that previous case, and this case looks pretty different. And you've said transfer this pension when normally you don't. There might be a perfectly good reason for that. You can review it. You can review it and look at the case. And the great thing about that is because if you start to build a process like that, as you review the case and go, okay, yes, this is a great example of an unusual compliant case, that can be added to the data set. So you don't need a huge number of cases to be able to do that, because the cases themselves are pretty rich in data for advice. So I think that is really, we're using it in a limited way with some of our clients, and they're finding it really useful. So we're just looking at expanding that. So that's one area. And the other thing was the transcriber technology, which I think is, again, it's improving all the time. And I think there'll be more and more applications like that start to come, and it's the heavy lifting, of the advice process. So let the humans do the things they're great at, with building bonds with the clients, giving them really nuanced coaching and expert advice, and take away all that heavy lifting with tools to help them. So I think that there'll be more and more applications in that space.
Yeah, two good examples. We're out of time, but Andy, I guess you might want to say just a few words about chat and the experience on that as a real use case.
Yeah, I think we found it sort of very, very interesting developing our chatbot technology and being able to help customers to get to the information quickly. We deal in quite a complex world of pensions that's often quite impenetrable for customers, and if we can find a way for them to get to what they want, or the right form, or the right person as quickly as possible, then that's got to be a benefit to everybody. It's the start of the journey. It's by no means the end of it. It's very much at that sort of only just touching on the AI side of things, but you've got to start somewhere. And I think there was one of the advice conferences I used to go to years ago. The chap always said, "Well, if you were waiting for the perfect computer, you still wouldn't have bought a computer." I'll leave it there.
Yeah. Thanks, Andy and Tony. Look, I found that session really informative and engaging. Thanks everybody for the questions and your attendance, and please don't forget to sign up for the next webinar, which I think will be a kind of really good follow-on to this from a data ownership perspective. So thanks for coming along, and see you next time.
Cheers, thanks.